Okay, I wanted to put a video together on how we can use the US dollar not as a not to be used as an exact science, but useful nonetheless in helping to build a profile of the market and building blocks for your thesis for the day. So, as intraday traders, we can use the US dollar and the excuse me, I've got a bit of a cold, so we can use the US dollar in terms of its momentum and trend to determine whether or not we have conviction across the pairs that we're trading against the dollar. So, for instance, I'll use silver in a moment and the US 30, and then we'll look at the Japanese yen. So, coming into the um, New York session today, we had a relatively mixed picture, didn't we, with the US dollar? If you look here on the left, first of all, using the TrendPredator, there's no setup, but there is a reversal context, and it's a reversal context because the market broke the high of yesterday and moved back inside. Okay, so that's reversing what? That's reversing the bullish trend. Okay. So that would lead us to assume, therefore, that we can look to buy assets against the dollar. If the dollar is weak, then we can use a weak dollar and invest, if you like, or trade into commodities, indexes. We could buy the pound, for instance, or sell the dollar to buy the yen, for instance. That would be our game plan. But that's not to say that the dollar is going to stay where it is. And we can't guarantee that it's going to keep going lower. So therefore, we need to be nimble with our approach and have two theses, a bullish and a bearish outlook. So the bearish one is that we stay below yesterday's highs. And for conviction, we would want to see that dollar aligned on the 8-hour chart at least. We've already got a market that's potentially overextended, 3 days of consecutive longs in the market, so a potential pullback on the cards. And then we've got this fake out high that's leading us to believe that, or leading us to assume that this will indeed break the Asian high and move lower and correct into these 3 days of longs, eventually potentially taking out the low of the day and to retest the low of yesterday at an extreme. So therefore, we can align ourselves with prospects of bullish silver, gold, stocks, sterling dollar, whatever it might be. Okay, so that's our bearish assumption. A bullish one would be, well, what happens if we take back yesterday's highs? Okay, now as we move into the New York session, we've got a low and a high. This is our new high and low for the London session. And at this point, now we're back inside of a range, aren't we? So we're inside. And so now we need to be even more cautious that we're not assuming that the dollar isn't going to reverse and potentially take out the high of London. Okay, so we need to be wary of what's going on here. If the session is a bit too wide, London high, for us to come up with any conclusion, then we can start looking at the Asian session again. We can conclude, well, all right, still got this fake out high on the day. And if we're below the Asian high, then that's bearish. And certainly if we're below Tuesday's high, then that's bearish as well. So we would look at the behavior of the dollar as we approach our session. Meanwhile, we're making assumptions on other charts, and the context of the dollar can help us with the conviction of those theses. Now, at this point here, what's happened? The dollar has rallied and it's broken above the London high. Okay. And as we come into our trading window, well, that's giving us the impression that we would be looking for strength in the dollar, and therefore we would be reluctant to be buying gold, silver with the dollar, given that the price of gold and silver would be less likely to rise. We'd be looking at selling cable. We would be looking at buying dollar yen, for instance, in the currencies, because we've got a strong dollar. So that's all this video really is relating to. It is to be used, the DXY, not as a foregone conclusion that, say, for instance, silver can't rally or the stocks can't rally at the same time the dollar is rallying. But we need to look at the trajectory of the market, the velocity of how the dollar is moving, and so on. And in a nutshell, really, if the dollar is in breakout, then it might be time to sit on our hands. If we've got setups that are looking bullish, let's say in silver, which we were today. So silver is in breakout. But if the dollar is also in breakout, then is it wise to be buying silver? If the dollar is in breakout, then we need to be cautious. It's not to say we can't buy silver. It's not to say we can't buy the stocks, but we need to be cautious, potentially reduce our risk, the size of trade that you're putting on, widen the stop loss. You know, if you're in an exceptionally bullish market, for instance, with silver here, maybe the strategy, even in a strong dollar market, and this looks pretty bullish on the charts. Here we've got an 8-hour chart, pretty bullish in silver, despite the dollar being strong. Well, our game plan might be one that we want to think about widening our stops. If we're convinced that, yes, silver is going to continue to rise, maybe up to last week's highs, well, rather than having a day trading stop in as close as this, for instance, if we just move forward a bit and get the opening range. So there we've got the opening range here. Or rather than maybe swinging for defense isn't going to be ideal in this environment. Having a tight stop loss in this environment isn't going to be ideal either. Where are we getting in? Let's say we gone in on this breakout. Under normal circumstances, in a weaker dollar environment, then that might be a pretty reasonable trade setup at this point. Fake out low, nice strong market, pumping through, taking it on the 10-15 candle as it opens up, perhaps, depending on what the 5-minute might do. But if you're convinced that this is going to explode, then that might be a reasonable setup. You might be coming in closer than that. Who knows? Whatever you might be gaming for 3-1. Then fine. But in a strong dollar environment, is that a sensible place to have your stop? What might be more reasonable is to say play the long game and think about, if the dollar's strong, then this can easily fold in before it moves higher again. Let's allow the dollar to strengthen and allow the market to consolidate potentially sideways. While the dollar's strong, then this is unlikely to go anywhere fast, and you might be holding on for a swing trade instead. And if we look at the dollar at this point, considering that it moved into last week's highs, which may act as resistance, then you can have a thesis, well, okay, it's going to struggle there potentially. It's already 3 days long. So a swing trade would depend on the dollar eventually decelerating and consolidating and pulling back, which would presumably allow for silver to eventually break out of the coil, the sideways momentum, and move higher. And that would be your swing trade setup into tomorrow, the next day. So just a wee insight there into how we can use the US dollar, the DXY, to plan for our trading. If the US dollar is in breakout, then is it sensible to be looking for the US 30 to rally, for instance? It was giving the impression that it wanted to. Over here. So it broke out of its opening range highs. Everything was looking pretty bullish across the time frames. It's not overextended. It could be in its infancy of a bullish move from 50% of the range of last week. Okay, a decent assumption that the price would be supported here and this will continue higher. Of course, this had the closing price and it wasn't exactly a 5-star setup, was it? Because it was below that closing price. Anyway, with the US dollar as strong as it was looking, then this was unlikely to break through the barrier. That's a resistance area. If you look at the dollar yen, on the other hand, well, this might have been a better candidate. If the US dollar is strong on its way to levels as seen earlier, previous week's highs and the dollar, then this might have been a better candidate to be thinking about taking a long. Okay, we're not 3L on the daily charts. We're not overextended. We're in an infancy, perhaps, of a bullish move. Having come up from the lows of the week, Monday, the opening range low, failing to break down, pumping back inside in a 1, 2, 3 day cycle trade setup to be looking for a long in what is an overall impulse correction continuation trade. So this would be a more ideal candidate to be looking for a long with strength in the dollar. Okay, and there's your trade and the breakout of the opening range. You've got some nice consolidation in here. You've got the pump dump, so an ABC breaking out of the 8-hour level in what is a parabolic session trade. Asia bullish, London bullish, nice pullback, stop hunt, acceleration in the dollar, and then the continuation for a parabolic trading session in line with the uptrend of the market, targeting a 100% range expansion, leaving some money on for the previous week's high if you want to hold that overnight, or whatever your conclusions are, thesis, the way you want to manage your trades. And that would have been the way to play it today, noting that the dollar was in breakout. So put the brakes on, step back, look at the bigger picture, and draw your conclusions from a holistic approach.